Hello, I'm David Adams, and this is our Q3 2015 market update. So, no doubt the past couple of weeks have been a wild ride, and literally as I stand here talking today, I recognize that the market is probably changing by the minute. There's been a lot of fear that's been stirred up the past couple of weeks, especially the past week, and I get it. Sure, it's been 6 years of a bull market, and we haven't had a true 10% correction in the S&P, and that's certainly not normal, but it's also not normal to see that level of a drop happen in such a short period of time. Now, I know some of you had a chance just a couple of weeks ago to hear our chief economist Jeff Salt speak here in Nashville, and he still feels strongly that we're only 6 years or so into what he thinks is a 10 to 12 year bull market, and that this current volatility, at least in his opinion, is to be expected, and it's not indicative of a recession like we saw in 2000 to 2002 or even a 2008 type of environment. The valuations are still very fair, maybe a little bit frothy, but compare that to the valuations that were quite a bit overheated in these previous bear markets. So what about Greece, and what about China, and the Fed continuing to keep rates low, and you have 18 to 19 trillion dollars of US debt, and at the same time you have oil prices plunging. I know it's hard to just ignore these subjects, but I just urge you to keep in mind that the TV pundits are really paid to do one thing, and that's create fear. And there's a discernible difference between day traders and investors, and we tend to take the mindset of investors where we stay the course. And keep in mind, one of my clients replied to one of my emails I sent out last week saying, "Thanks, David, we're not worried about this at all. We, like everyone else, know that Donald Trump is going to fix everything." Ha ha. So yes, it's very easy to get distracted by these headlines, and I do have some real concerns about China, but I always have to remind my clients that the market really cares about one thing and one thing only, and that's, generally speaking, are things getting better or are things getting worse? And I'm just going to make a couple of arguments to the point that I think things are still getting better in the midst of all the chaos in the headlines. So one would be manufacturing. I've talked about this before, that we have a lot of manufacturing coming back to the U.S. So think BMW in South Carolina, Volkswagen here in Tennessee and Chattanooga, and made in the USA is becoming a theme again. We also have the U.S. potentially on its way to becoming energy independent by 2020. That's definitely a good thing. We also have access to cheap capital with rates very low. And historically, anytime there's been access to cheap capital, good things have happened in this country. All that with the addition of soaring levels of creativity. So we're still the United States, and the rest of the world still admires and marvels at companies like Apple and Tesla. And I think we're just getting started with some of the innovation. One stat that I wanted to share with you about market corrections that I read from JP Morgan and Standard & Poor's this morning was that if you go back to 1980, the average entry year decline was around 14.2% in the S&P. And I mentioned before we haven't seen that in a while. But despite that level of drop, 27 out of the last 35 years, the market's finished positive. So I think the recent pullback is relatively small by comparison, but understandably, it's certainly nerve-wracking. So let's say we are just experiencing a 10% normal correction. I'm still going to argue that it's healthy required for this, or it's healthy for this bull market to have a chance to weed out some of the speculators, and also it presents a buying opportunity for the market for a lot of investors that have had money sitting on the sidelines making 0 to 1% if they're lucky in cash. I've yet to hear a real consensus view that says that we're heading into a global recession like 2008, but there are some talks that this current correction may have another leg to it on the downside, and I do think that's a possibility, and it is a concern of mine. But the challenge really remains the same for us as advisors that it has the past few years, and that's asset allocation has significantly lagged the S&P 500, and it's really made a lot of investors and advisors question their portfolios. But how soon we can forget as investors 2008 and 9, where you had the S&P drop 60% from peak to trough in just a matter of months. So while I can't guarantee what the market's going to do, and I can't guarantee what rate of returns you're going to get as an investor, I can guarantee as an advisor that I'm always going to choose risk management, asset allocation, and diversification, even during periods of a bull market where we're going to have to give up some of the upside. All right, so until next quarter, please do this for me. Focus on your family, focus on your faith and your health, and do your best to not worry about the recent market volatility, and that is all. Thanks a lot.